Hey, what's up, traders? Trader Tim here from E-mini Mind. Today is the 27th of January, and we're doing a market analysis to kickstart the week. Before I get into the E-mini S&P day trade stuff, I wanted to start on the bigger time frame. I'm actually going to go out to a monthly, and now this candle hasn't formed yet, or closed rather. We've got the rest of this week. But if we kind of project out, we've been talking about this 32.15 as we kind of sit on top of the negative 23% target on the big retracement from down here at 23.75. Well, things are kind of shaping up, at least as the year has started off, with the potential to kind of stall out at this area. Now, Wednesday of this week is the Fed meeting announcement. We also have some bigger earnings coming out as well. I know Apple reports this week. So watch out for those. If you do have any swing trade positions on, I'm not a fan of holding through earnings, at least with a full position. If you've taken profits along the way and you're well into the black and you want to keep a contract or two if you have the option or some shares, that's fine. But you just don't want to go into an earnings announcement with a full risk position on. But if we kind of draw from the swing low down here to highs as a potential pullback point, I mean 2840 would be that level. So I don't think it's going to happen here overnight, and I don't think we're at risk of the bottom falling out of the market here. But we certainly have the potential to move sideways for a little while if we can't break out here shortly. And the reason being, go back to the daily chart. Now that we've had this nice little gap down to this support level, and we talked about back here where when you have this uptrend with no real consolidation, except for this spot here, and now we have consolidation up here, those are the levels that become support. You could argue this area around 3150 could be a support level if we fall further, but it's good to have this kind of activity. Now, this was, remember, back between Christmas and New Year's. Granted, it's typically slow during that time, but getting some support there, some sideways action is now acting as support. And when you get sort of a break of trend, if I were to draw the uptrend line like this, now we have a little bit more volatility in the market. We should see a little bit more activity in the day trade front. It would not surprise me at all to have two, or at least tomorrow be like an inside day, and then Wednesday be slow until the announcement. So almost like a bear flag. I could come up and draw from highs to lows, and I'll certainly be watching that area, 3285, which happens to be the unfilled gap portion, like the low from Friday, and that's right about 3280.50. So coming up and filling the gap would really just bring us to the underside of the trend line and the halfway back short. So I'd be watching that area as a potential fade point to be maybe shorting. The other thing I wanted to talk about, when you have this kind of situation, because on Thursday I ran through some swing trades, and this is kind of every, um, for swing traders or people who are thinking about swing trading, this is kind of, you feel like this would be your worst nightmare, where you're in a position the market gaps against you. What do you do? And that's why people turn to day trading, because you can be in flat at the close and you don't have any overnight risk. Well, it's really not as scary as you might think. So let's go to the Microsoft trade, and keep in mind, the original entry was back here at 59s, or just above, about 59.21, and which we're still above that. Profits, have been taken along the way up here at highs, and so by this point, you should already be sort of, down to maybe the last quarter or third of the position. And when you get a gap down like this, what I like to do is go, you don't want to panic. I don't start the day with my stops in just in case something like this happens where you have a gap. What I like to do is go to the 15-minute chart, wait for the first 15 minutes to close, and put my stop underneath that low. So today, it was 160.20. I just put it down 159.99. Just gave it a little wiggle room, and then let the day go on. And what do you know? We did not break that low. So that's just a good way to kind of have a plan in place so you don't have to panic. It's very, possible that this could be a swing low, and if, tomorrow's flat and then Wednesday ends up being some kind of spike, or Thursday, Friday we end up rallying, then whoop-de-doo, you got your stop underneath the swing low, but you're still in the position. You didn't panic, close out, and then it rallies without you, and then you have to buy it back higher, and you're all frustrated. So that's a little trick to stay in on days where it gaps. Now, at that same, like on the flip side of that, so the Microsoft kind of moved down today, but then because I've put on the short positions when the market was up, look what BNFT did. It made new lows on the day, and it's short from underneath at 85 up here. Every single day it's made a lower high, and this one is dropping pretty nicely. So when you put on your short positions when the market is up here at highs, then they reward you when the market drops, and maybe your long positions, we were taking some profits up here. So it's kind of like a little bit of a balancing act, but you're always looking for shorting when the market's up, and buying when the market's pulled back. In terms of ES trades today, um, the we kind of rallied off of the open. We had the gap down, and then we had the little rally. There really wasn't anything to do on the 5-minute. The candles were pretty big, so when they're above 4 points, I don't try and bracket them, just because like it's so big, it doesn't take much of a move to stop you out. So there was a little bit of a run up here, and then we pretty much went sideways for the rest of the morning. Like if I do that, it really looks messy. Not a lot to do in here. And we had pulled back to the halfway back long. And so, like on the 5-minute, it would look like that, which I was hopeful for. But we rallied right up to the halfway back short. So you can't really take a long up against a short, and you can't really take a short up against a long. So what that means is this becomes a no trade zone. So if I go put a little box like this, that becomes a no trade zone, and you kind of have to wait until you break the 61.8. I could even adjust it here so we include the 61.8 of the long and short, and you end up with something like that where this becomes a no trade zone. There's not really anything to do. The only case you could make is if you assess this distance, so 20, we'll just call it 3243, and then up here is a 3248. So it's 5 points today, which is a decent distance for a range. And when you didn't really have any opportunity on the short side, because if you drew up this short like so, we were pretty close. Like this low is pretty close to the halfway back long. But on the long side, if you come in here and you look at this as a tiny long, now that's one that you can buy, because the distance from its entry, it happened to be right on top of the halfway back long. That distance all the way just to the opposing halfway back short, I mean, that's 5 points. That's a legit, that's a legit move. That's a nice size move. And so that is a trade I'd be willing to take. But otherwise, anything within that range that I just drew up is going to be a no trade zone. The reason something like this works is the same reason that you might take a very tiny double top or double bottom, because it's so small that it really hasn't gotten going yet, and you can get into the trade. And even if it gets resistance at the halfway back short, like the opposing setup, you're in the black, in a big way. You've gotten a first target hit, and you've been able to tighten your stop. And if it does end up breaking, then you're already in the trade. So that was a nice little long, but it only worked out because it was so small. And it helped that we kind of came down below the 50%. But if I back up um, here, and like I said, with the short, when I draw from the swing high down to this low, well, it's already made, it's already gone 2/3 of the way to the opposing long. So now if I short, I only have maybe 3 points or so of room before we hit the opposing long, which isn't quite enough to, justify a good trade. So um, that's that for today. Tomorrow, I'm not expecting a whole lot. We will be doing a live trading session, even though it's Tuesday before Fed announcement. I've got some other things to talk about, though. We're gonna go through some swing trading strategy. We'll obviously be watching the ES in case anything happens, but it tends to be a little bit slower day. So watch out for an inside small range day tomorrow. If it's not the case, great. We'll we'll trade it. But if it's a very tight range with not a lot of movement, then likely going to be pretty quiet. So I hope everyone has a great week, and I will talk to you very soon.